All right, let's go ahead and get started now. What's going on, everyone? Welcome to another edition of Crypto World Radio, presented to you here on Because Bitcoin Twitter Spaces. And today is going to be more of a community-oriented space. And just as a reminder, go ahead and check out our pinned tweet for our trading competition sponsored by BingX. And if you want to join a Discord community, go ahead. The link is in the bio, and we also offer things like High Block and also upcoming Nansen and some Glassnode stuff that's going to be rolling out within the next few weeks. So you can check that out if you'd like. But I'm here today joined by friends of the show, Avocado, and also our boy Dow Chemist. And we're just going to discuss some things that have gone on throughout the week. So with that being said, if you guys want to join in on the conversation, feel free to click that request button and I'll bring you right up. Today's going to be more of a community roundtable space, and I've been hosting those more frequently. So that's always fun. Without further ado, I want to welcome you guys again. Thank you for taking the time out of your day to join us here. If you enjoy this content, feel free to follow us. But anyways, all right, let's get straight down to business. What's going on, guys? Avocado, how are you today, brother?
Hey, Wabi. Yeah, I'm pretty good. I'm pretty good. I guess everybody is just trying to see if this leg of the market is going to be what everybody expects. Like, do we get that nice pullback that, everybody draws on their charts and expects that, nice little nice little support to hold? Or, was this too fast, too quickly, and we have to pay for our sins a little bit? So that's what we're all looking
No,
at.
I agree with you on that, man. As far as these altcoins go, like specifically like DeFi L2s, like L2 stuff on ETH, also NFTs, metaverse, like I had said, and the AI tokens. If you compare that with the basket of sectors that rallied in 2019, which are, the L ones that didn't survive and a lot of the Binance IEO stuff, the average rate of return on that basket was 400 to 500%, and that's exactly what we've seen. And even with Bitcoin, right, as far as market cap added from the bottom, we've already done that same move. Bitcoin went up like just right around $10,000 from the bottom and peaked out there. Bitcoin went up more recently about $9,000, so it's not really the same amount as far as percentage wise, but market cap wise it's almost the same thing. So if we topped out here, I'm perfectly fine with that. Um, I know I was a bit late to the party, but I managed to get some plays with things like Aptos and Conto, and even more recently, those NFT ETFs that we discussed a few weeks back. And dude, those are all up like 300, 400%, and that is absolutely wild. And I was mentioning that to Khalil, and like he looked further into it, and he was mentioning how it's pretty much just because of the liquidity just isn't like rampant enough for it to act like regular spot exposure. So it's more like a weekly call option, to be honest. And those were fun. And after that, I found myself to be a bit euphoric over the last couple of weeks. So I decided, to realize a lot of those gains and walk away. And I'm probably going to sit on my ass until Q2, probably until like April, May. And I have no problem with that. Daily structure looks absolutely awful for Bitcoin. And as far as stocks go, even though I don't trade them, we got rejected right off of 4,200 on SPX. So I'm fine, dude. Made some gains. Easy mode was okay for a while. You could have easily just thrown any ETH into any of these DeFi or metaverse products right during CPI week and made a killing, dude. You could have waited just for that and not really try to catch a knife at the bottom. So that was all nice. So I agree with you on there. It would be nice to retest the lows or maybe even 19K. So yeah. What's going on, Dow Chemist? How are you doing today, brother? Good to see you up here, man.
Hey, doing great. Glad to be with you guys. Always a good time to be with you guys. But yeah, I kind of agree with Avocado, man. It kind of looks like a pullback. I'm less of a technical guy, so I'm a hodler, man. I barely look at the charts, but I do agree that some of the narratives that you mentioned, right? AI, layer twos, and DeFi 2.0, they have legs, right? Like in spite of whether we're in a bear market or not, or whether we're actually coming out of it, you can make some significant gains just following, a narrative that you really like can deep dive into and figure out the project that people really believe in. I think the whales have been accumulating. In my case, I'm really heavy on layer twos. So Arbitrum for me has been a great play. Obviously, I suffer like the rest of the market, but a lot of those projects are, basically, bear market resistant because they're so new. And the promise there that finally we're getting to a place of maturity, right? I don't know about the AI narrative. I think there's still more effervescence and more speculation than actual real use case. But in the case of what we call like the DeFi 2.0 protocols and projects, they're building on top of true and tested money Legos like Aave, Curve, Compound, Uniswap, things like that. And they're finally getting to a place what we call product market fit, where it's no longer tomorrow will deliver on the value, is rather today they're actually providing value, whether it's providing liquidity to smaller projects like long tail projects, whether it's providing a great interface for trading derivatives without having to face KYC or AML or scams like FTX. There's some projects that right now in specific narrative are actually delivering on the promise and not just selling you a promise.
Isn't that something what Phantom is doing? Apparently, their runway is at a cost basis of a few decades, and they're actually building out all of their infrastructure. So kind of like the last cycle, we only had a very very small basket of products that actually survived into the next run. We're seeing that more come to fruition. Things like specifically the Cosmos Hub. I am very, very enthusiastic about what that community is doing, especially their network of devs. I'll be hosting Zaki. Shout out to Sefi for that, by the way, and good to have you up here, Sefi. I'll be hosting him next Friday, and more related to Cosmos, I'll be hosting the guys from Saga again. I'm going to be hosting the official Twitter handle and also one of their founders, Jin Kwan. So, very excited development on that. And I'll also be hosting Say Network within the next 2 weeks. So, look forward to that as well. Um, so, with that being said, talking about Cosmos, we have Sefi up here. Sefi, what's going on, bro? How are you doing today, man? Good to have you up here.
Not too much. We're we're kind of going the route of the fugitive coins, which is the new category in crypto. Uh, we're
Flex.
it's a
You
basket
want to
of
flex out here, dude?
it's a basket of all the different coins that were run by either scammers or run by people who like got their coins wrecked for some reason or the other or whatever. It's just kind of funny. But the rage coin or the fugitive coin is kind of like the coins that everyone's pissed off about, which is funny because it creates max seller exhaustion, which means that like it's easy to move these things, relatively speaking, from the bottoms. So like that would be things like we like that's what happened with Luna Classic, where we bought it after it got totally crushed, and then it went up afterwards. It's what's going to happen probably with Luna. It's what's going to happen with this Flex exchange, which is the one that Roger Ver rugged. Roger Ver of Bitcoin Cash fame basically like owed them like unsecured margin, and he didn't pay it back, so the Flex token got wrecked as an example. And it's not really that someone like at the Flex exchange did something bad. It's just Roger Ver literally fucked them, and that's what happened. So we're like grabbing all these little like things at the bottoms, and I think the trick in crypto too is like the more people that you talk to who are either founders or whales or whatever it is, you kind of get a sense of like where the market's going and what kind of things are going to be coming up on like with initiatives that would drive growth. So yeah, it's kind of a fun little narrative. The fugitive coin concept, it's kind of its own little category. And I think most of those things are at the relative bottoms, which is kind of cool. So it's like the market caps are super small, and it's easy to drive those narratives over time. So that's some stuff to look into. Yeah, it's not always like what necessarily is the most popular thing. It's about your communities and like where you think you can create narratives. Like the AI thing kind of came up truly because of you were talking about it because of the like more immediate popularity of Stable Diffusion and OpenAI and whatever, and then that led to like a pump in crypto that had no relevance to anything. Like none of those things benefit crypto in any way, but like people bought it just because they thought AI. I made pretty good money on the AI stock, for example. There's a company called C3.ai, and it's an AI like related company. I don't even know what the fuck it does, but I'm like, hey, you know what? Everyone's talking about AI, and when people look for the stock, they're going to see the ticker AI, and they're going to buy this. So I bought it, and then like at the very very bottom of the stock market crash, and made like a good solid 70% in 2 months and exited. So it's just stupid. Like it doesn't make any sense that the thing went up as much as it did. But like you guys are saying, narratives and just the goofy like retail participation in the stock market and crypto leads to these weird pumps. And I'm fine with that. Like I'm fine with writing it up if people want to be ridiculous. And you know, it's a lot of fun. But yeah, there's a lot of interesting ways to make a buck, and a lot of times it's in these kind of like dark corners, I would say.
Well, talking about dark corners, Umami Finance rugged. I think it was yesterday or the day before, and a few days before that, like they had made a post talking about compliance strategies and all that sort of stuff to explain how they're solvent. I think they're the biggest rug so far on Arbitrum, and
Yeah, it's
very
pretty.
some very strange behavior, man. So Sefi, I've seen you. Mistake me if I'm correct. My bad. Correct me if I'm mistaken here. But yeah, I saw you in those BTC ordinal space, man. How's that going? Because I know we were entertaining a situation where the value proposition for Bitcoin itself uh, could potentially go parabolic in the next couple of years if things like NFTs are created within it. But it seems like it's a lot of OTC trades and something regarding like
Yeah, I don't know where
block
the
size or whatever.
I don't know where like or who would produce the marketplace for these things.
Yeah,
So if you're
because
into
the
this
UI is
ordinal,
horrible, dude. The UIs are horrible in Bitcoin.
if you're into the Bitcoin ordinal thing, which is basically forms of verifiable scarcity besides the usual Bitcoin on-chain scarcity with the proof of work, like basically like the first minted block and things like this. I mean, I'm the first sat per block or whatever. Like there's these interesting ways to kind of create arbitrary scarcity, which I guess if there's a community of people that think that matters, then of course it starts to matter, right? It's like a self-fulfilling prophecy. If that happens, I think you would the way to play it would be like you'd buy yourself whatever these things are now and hope that there's kind of like an OpenSea type of arrangement for that at some point in the future, and then it becomes more fungible at that point, and the possibility of making a buck off of it. Like I guess it would be the same concept as being early to like ether rocks or whatever the fuck, right? Like it's like kind of an OG status thing. I don't know. I typically don't buy into those things. It's just not like illiquid stuff is not that interesting to me. So I haven't kept up with it, honestly. I'm certainly no expert at it, but I can understand what they're trying to do.
Yeah, that's a good point. Like, I think the UI is crucial because right now you really have to know your way around it. Like, if you're a regular retail user, it's probably too risky for you to figure out how to do those OTC trades. There's no marketplace, so how do you sell it without running your own node? I don't know. So obviously those things will happen as there's a lot of excitement around the technology. But people have to remind themselves, like, it's a workaround, right? Like the Taproot update that enabled this new feature where you can have a payload attached to a Bitcoin or a transaction, that wasn't really like meant to work this way. So everything that they're building, it's not built on top of a standard like a ERC 721 where the a lot of the developers in the Ethereum community get to provide their input and think around like what function should be part of the protocols, right? This is more or less a protocol on its own that looked at what they could do with Taproot and decided to really expand on a use case that really wasn't meant to be. So obviously you're going to see marketplace eventually. You're going to see explorers, indexers, and things like that. But as if I is saying, it's very risky, right? Like right now, you're gonna see a lot of euphoricness because obviously you can put crypto punks or alternative crypto punks on chain on Bitcoin, and Bitcoin is the biggest chain, so it kind of makes sense to speculate. But until you start to hear a conversation around standards, infrastructure, it could go down, or
One of
another
the
protocol could replace original.
Yeah, one of the reasons these things could pump a lot more, though, not trying to be bullish or bearish, but like just looking at a balanced view. One of the reasons why I could be wrong about like not entering this and why it could go up a lot is just a tremendous amount of liquidity in Bitcoin, and there's a lot of Bitcoin OGs that are quite wealthy who don't mind blowing some BTC on something like this. So that
All those
there's
times
kind of
that I say
a
I love you, you
potential for like an
lied to
OG
me.
groundswell or like people willing to waste money on this shit. Like so, like these things sometimes go up a lot more than people think. But again, I'm not buying any personally.
I wonder what would like borrowing and lending protocols. I wonder how they would look like built on BTC, and that's why I've been sort of saying like, hey, if this is actually going to be a thing, you might want to check out the UIX from Xenon Network, and it is the most obscure cypherpunk thing you'll ever look at. If Seffi, if you ever seen those '80s movies where they're kind of like futuristic, like Blade Runner and some of the Arnold Schwarzenegger movies.
Yeah, of course.
It kind of has those vibes. Like if you were to take Blade Runner and imagine Blade Runner as like a website with all these gadgets in the UI that are just completely unnecessary. That's what I imagine Bitcoin DeFi to be like. But like the dev base and the community base around that is like they're trying to make it seem like, oh, come back to BTC, come back to BTC, which is fine. I like BTC, but they're trying to make it so much like Ethereum that it's very like
At
it's
at
very
some
questionable,
level,
man.
what bothers me about Bitcoin at the moment, or just crypto at large, is I'm still not happy with the pace of protocols that focus on quantum resistance. I think that is a much more of a concern to me than it once was, especially when you combine like a variety of advancements this last 6 months to a year in quantum generally, but also like this the doubling time in terms of how many qubits per like how much qubits per volume density of compute and everything. It's getting better and better, but also some of the like software techniques are getting better fast, and on top of that, AI is going to help accelerate the programming and creation of the hardware at some level as well. I think like it's affecting everything. So I think what's irritating to me about the Bitcoin community right now is I think it's got to attract those people with that type of cryptographic skill, which is very small and few in the world. And without that, every year that goes by is going to make people increasingly nervous. Because like I think IBM Osprey like hit what 330 qubits or whatever. Like to make a material impact on BTC, you'd have to be in the probably like 1 to 10 million qubit range computer, and that it could happen quite quickly with the current doubling time. I calculated something like 10 to 15 years at most, and you have an issue. So like that bothers me a lot, and it it makes me think carefully about how much more I'm going to place like my assets in BTC specifically versus other things. Anyway,
Avocado,
just
Yeah,
you had your mic off, so go ahead, brother. Stage is all yours.
yeah. I was just gonna go back to the ordinals conversation quickly. Yeah, I mean, obviously, it's really taken off, and I think it's quite interesting. But it does feel like it's a little bit of a workaround solution, like someone said on here, in the sense that I mean, basically, it's just using a separate protocol to kind of inscribe into certain sats, like basically, kind of different information, and making those sats kind of, fungible to some extent. Uh, Sorry, non-fungible. So, in some sense, it feels like a bit of a hack, but I guess it's kind of a useful hack. And it's starting from a lot of these collections are limited just because only people with nodes can create them, and also because the collection sizes are actually quite small, right? We're seeing like in the kind of the hundreds of pieces as opposed to 10,000. So I think for the time being, it's going to command higher prices, and it's doing well. Obviously, we've seen some outrageous sales of 5-10 BTC per kind of like punk or whatever. But it's definitely limited, I think, in terms of what it can do in the sense of broader like adoption and broader utility. Like people are going to want NFTs that do all kinds of things, and Bitcoin will inherently be a bit limited in kind of providing that functionality. Like you can't upgrade the NFTs. It's cool for people who are crypto native because it's fully on chain, and so that's something that's interesting. But that's not interesting as soon as you leave that immediate circle of crypto native people. But I sympathize the most with like BTC ethos in general, and like libertarianism. So I think that's interesting. But yeah, for now it's very interesting. But I definitely acknowledge that there are a lot of limitations to sort of the ordinal structure at the moment. But it's cool to see it though.
I'm wondering how the security aspect is going to work. Because this is going to attract a lot of scammers and very what's the word for it? Very classy scammers. Like if you see Umami, right? They came off as like this institutional grade product, and they end up rugging. So you're gonna have rugs on chain on BTC for the first time in its history, and I'm wondering how that's gonna look like. Like I can just picture it now. Some OpenSea-esque platform on BTC with a ton of TVL, and then the guy just pulls a plug. What are the next steps after that? Like, does that node get shut down, or or what have you, man? Like, there's two cases. There's two
Yeah.
cases to be made on both extremes. You know what I'm saying? Like, on the one hand, like, yeah, mass adoption, this and
I
that,
think the
but
safety thing would be, if you're gonna fuck around with these things, have a separate wallet with a little bit of Bitcoin in it. Don't connect your primary wallet to any of this shit. Like, generally speaking.
Yeah, the interesting thing is like this is obviously like fully on chain, right? So I wonder if like someone is going to like inscribe something that's I don't know, like something the government doesn't want you to, like
that's definitely
some
going to happen.
cookbook,
It's just a matter of when.
some cookbook that's not supposed to be circulated, right? And it's forever on the blockchain, and that's not going to get looked at favorably from government. So I don't know. I see a lot of weird scenarios, but overall, it is the purest form of free speech, I guess. But
Yeah, I don't know. There's not much power to do anything about that, though, in the sense that like BitTorrent still has a bunch of nonsense on it, and no one's been able to do anything about that either. So I think it's it kind of raises eyebrows maybe, but I don't know that anyone can really do anything about it.
shocking development. You can actually hear farts on BTC's chain now. Someone actually uploaded farts. Exciting innovation going on, guys. Exciting.
You'll hear them forever. They'll never go away. Beautiful
That
thoughts.
is.
But quickly, just touch back on Umami, right? Because I think it is interesting. I don't look at it as a rug. I understand why you would look at it this way. I think it's just a difference of direction, right? The CEO, I think he's handled this intrinsic DeFi, right? He really wanted to put the emphasis on institutional adoption. He's working with Circle, having an account with them. And the idea made sense, right? You make DeFi as friendly, as user friendly as possible, and regulatory friendly as possible for TradFi to come in, right? Easy 4x, 5x on LSD, staking Ethereum or some other coins, right? It made sense, but the advice that he got from his lawyer was that for now, if he was to give the Umami token holders any kind of reward, it would be deemed a security. So he went along with that direction, but at the same time, Umami is not just one project. It's actually a DAO, a LLC, and maybe a consortium. But there's different pieces, right? And the DAO disagree with that because obviously the token holders all of a sudden are just holding a coin that maybe I guess you can say it's a governance token, but that wasn't the original value of it. The original value was that you're part of the Umami DAO, and you earn a portion of the funds, right? Like the 2 and 20, right? Like 2% of the gains, maybe 2% of the overall capital, right? All of a sudden that goes away. Well, what's the value? So the DAO wanted to go a different direction and say, okay, we heard the advice from the lawyer, but we want to follow the ethos of the DeFi community or the Arbitrum community. So they went away and they put pressure on the CEO to sell his coin. So because he had a massive bag, the token went, I get, from $20 to like $9. So it does look like a rug, but it was more the case of the CEO being divested and basically having to exit his own project.
What are your guys' thoughts on this Operation Choke Point? It's basically the shutting down of a lot of the staking services, right, across U.S. exchanges, and I think it's only going to be U.S. exchanges. But that interchains then DeFi, our first case of mass exodus, right? Because this is essentially setting up a stage where there could be mass exodus off of retail platforms. The first case of that was with FTX. I hate mentioning FTX, bro. Let me be honest with you guys. It kind of makes my eyes bleed when I see those three words. I'm kind of sick of it. But what occurred during that time period is that a lot of people got rugged, and um, a few other people just withdrew their money from the system. And you had a case, Sefi. I think you were in the first episode of Crypto World Radio. We were making the suggestions that this could cause an influx back into DeFi and an exodus outside of centralized exchanges. And if you look at what's occurred since then, take a look at the total value locked up that has occurred within things like Lido and other things on L2 like Aura, and also, of course, like the GMX TVL in itself, and also Aave upticked as well since then. So perhaps all the LSDs across all different chains will kickstart into high gear, and it kind of sets the stage for DeFi summer. I think the second half of 2023, you're going to see a lot of cool things pop up, but there's definitely going to be a lot of fear if this quote unquote Operation Choke Point thing comes to pass. And I think people are going to think that it's over, quote unquote, it's over. But I don't think so, man. If anything, it'll be another like generational buying opportunity. Like Sefi, I remember that space that you held on the second, and you said that you had actually purchased some coin spot, right? And I was bringing up the idea that if it trades in the teens, then that is a no-brainer to start going into like some call options, right? Like some leaps, with an expiry probably of like June or July of 2024, right after the halving. And potentially that can happen, but I'm not going to bet on it. But would be pretty cool, man. Would be very, very, very cool. It's just a
Yeah.
matter of like being careful of what you wish for. Like
So
if you
yeah,
say, oh, I want an asset at this price, right? Then you have to be aware of the context. You know what I'm saying?
sure.
So
Yeah, like looking at like let me describe what this this staking regulation situation looks like from not really regulation but crackdown by the SEC. Let's say, like let's see. I can dissect what it looks like for Cosmos as an example, just because I have used the liquid staking on Coinbase. I've staked on Cosmos. I have an idea of like how Coinbase does it. So Coinbase is the number 4 validator on the Cosmos hub, which is the Atom coin. They are called Coinbase custody on that particular chain. So if you look up the validator list on Kepler dashboard, that's what you'll find their name as. And they have been undelegating substantial amounts lately, on the order of like 1.5 to 2 million Atom. And what's going on is like right now, if you have Atom on Coinbase, I think they give you something like, I don't know, 4% yield or some shit. And if you're just trading Atom, like you just want to buy it and sell it and hold it on the platform, getting an extra 4% for doing that was just a freebie, honestly, because they're giving the users, like, I don't know, money that they would not have otherwise had, and they allow their Atom that's on chain or on Coinbase to automatically be essentially liquid staked. Why aren't you getting the full like 21% inflationary yield of Atom right now? If you do leave it on Coinbase, it's because Coinbase can't stake all the Atom on there. They can't stake all of user funds because they obviously have to be liquid to be able to, like, if you have a withdrawal, they need to be able to satisfy that withdrawal. So some fraction of Coinbase's assets, the Atom that is held on behalf of users, is staked, and then that leads to some of the yield, and that yield then is paid out to users, which is really kind of a benefit to users, honestly. The SEC is basically like screwing over retail with this in a sense. Now, there are other companies that didn't do that. Like, for example, Voyager and some of the other platforms out there, they didn't actually stake your coins and then pay out part of the yield. What they did was they lent it out to people like, I don't know, Three Arrows Capital or whoever the fuck, and they basically just paid them yield while they're degenning on your coins. That's a little bit different. So with all the wreckage lately, part of why they're cracking down is because any given exchange like has slightly different products in terms of how they offer that, like staking yield or lending yield or whatever the fuck you call it, like earn programs like Gemini has had, like and got in trouble with. Voyager had Celsius, Nexo, like, you know, tons of these things. So big crackdown on all of this, and but Coinbase was basically a good player in this whole mix. They were basically making it easy to get a little bit of money on your Atom if it was sitting there, like if you just kept it there for trading or whatever. But at the same time, that was not the best place to get yield on your Atom. Like if you staked it, it's like, I think 21% inflationary right now. You're only getting like 4% or something like that on Coinbase. So, yeah, you know, no one was like recommending you keep a ton of it there for any reason anyway. But that's kind of what's going on. And I think it's this mixture of different yield products that's the issue. I suppose they could apply for an actual like SEC thing to get, like, be able to provide this service, and then have full disclosures and all that other business. But I think the reality is, like, they probably don't make enough money on this generally, and that's and so I don't know if they're going to go through the trouble of doing it. The other problem with Coinbase and the exchanges, at least in the United States, has been, if you notice on U.S. exchanges versus like Binance, KuCoin, or anything else, notice you're missing like significant amounts of leverage trading. You are also missing like simple things like exchanges that offer bots like grids and rebalancer bots and all these other things that are real popular when you go to international exchanges. And Coinbase and others have had a hard time making money. So that's another big issue, is like, if the SEC doesn't allow these kinds of products that are popular with users, the concern for something like Coinstock, which is Coinbase's like stock, is like the issue is going to be, how are they going to make money, and how is that going to drive value to shareholders or whoever. The whole thing is very concerning for the United States like exchange market, especially when in bear markets, like when the relative price of coins are down, the amount that they're making on fees is relatively low. So it's super, super concerning. As a shareholder of multiple like companies, some of which are doing okay and some of which did not do okay, one of the common themes was like these companies not be able to make much money. So everyone thinks, oh, like, Coinbase is getting rich or whatever, but not really. Many of them are not doing well financially. So, like, to me, that's the most worrisome part of the United States crypto market, is the on and off ramps are not healthy at this moment. We're not just talking about FTX or whatever either. We're talking about the relatively successful platforms like or the safe ones like Kraken, like Coinbase. They're just not making money. So how do they stay open long term? I don't know. It's an important concern for everybody.
I think during this time, you're going to see a lot of liquidity injections in the background, where like the average retail user isn't going to really know what's going on, and bringing this sort of stuff up, and ultimately, like, maybe things like Kraken are opening up their doors to institutional investors, but they kind of have to, you know, rebrand their services. But ultimately, like, I think you're gonna see the ethos of crypto come back to its fruition, which is the ownership of your assets. And I'm aware some people want to buy their stuff on Fidelity and Schwab and things like that, but crypto in its very essence is, I think, in the next 10 years is still very much going to be within DeFi and within self custody and things of that nature. Most of the big players within this industry, dude, like they're all just individuals that just hold, man. Some of the biggest like BTC wallets and ETH wallets, they don't really do much, man. For the most part, they only move when things go parabolic. So
Yeah, I understand that it looks that way, right? Because everything was really slow, especially in terms of adoption. Like, we still don't have securities, we still don't have regulations, right? And it seems like the big players, obviously, they make moves in crypto, but it doesn't seem like they're really like in it, right? If you look at Coinbase, for example, most of the business is retail; it's not institution. So it looks that way. But the way adoption works is it's slow, 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 and then everything all at once, right? And it may look like it's 10 years from now, but it's actually the Boston Group Research, or the Boston Research Group, I can't remember the name, but they actually had a conservative estimate, right, based on their research, that by 2030 there'll be 16 trillion worth of real world asset being onboarded on chain. Now, just to put a perspective to that, the current total market cap of the entire crypto space is 1 trillion. So 16 trillion in the next 6 years, that is massive, right? So that begs the question, what kind of, form factor is it going to be? ERC20? Is it going to be NFTs? Is it going to be security tokens? It almost doesn't matter when you start thinking that this is going to be institutions, and they're going to need votes. They're going to need portfolio managers. They're going to need all kinds of risk models, things like that. So you're going to have this insane infrastructure that has to be put in place. And by the way, that research group is not a DeFi or crypto group. This is like regular TradFi, who talk to some of the CFOs of, like, Fortune 500. So I think what's going to happen is we don't see, or we don't talk enough about the infrastructure that's being built. Some don't work, like Umami, for example. We have Credo, for example, for institutional custody, right? So we don't talk enough about that infrastructure. But when those things are in place, provided some decent regulation, it's going to happen faster than we accept.
I agree with you on that, man. I want to welcome up a new speaker on the panel. I've been to his spaces before. Gonzo, what's going on, brother? How are you doing, man?
I'm doing great, King Bobby. Thank you for inviting me, man. You're always sending me messages, and I've been so busy. This is really interesting space and a really interesting topic. I was wondering if this is what you guys were going to be talking about. So I'm glad I'm here, man. I'm trying to learn. Um, yeah, like I said, I'm involved in an NFT project right now. I'm about to mint my project in 2-3 weeks, so I'm very busy with that right now. But I'm always trying to stay on top of things, right? Especially with the market today and everything that's going on. Currently invested in some tokens, in Bitcoin, of course, myself. Uh, so yeah, very interesting conversation. Thank you for all the information, man.
Yeah, no problem, man. So given that you brought up NFTs and Dow had brought up like institutional custodial solutions, how do you guys propose how that would look like for things like NFTs? And again, like I know I've been mentioning this project a lot, but something like Shibuya, right? Shibuya XYZ, where the creator of these products are gonna be paid residuals from the community. And so anytime, like, a piece of your collection gets featured on one of their film collections, you get paid in either the NFT, right? An NFT that can represent a token. It's like this dual token layered system. I want to know your guys' thoughts on like how exactly would that look like from an institutional custodial perspective, because the conversation is always only tailored to BTC and ETH and not so much things like DeFi and overall Web3. We can start with any one of you. Maybe Dow, since you brought it up, I wanted to know your takes on it.
Yeah, that's a great question, man. Like, I wish I had more answers on that. I just kind of follow the players that I think are moving in the right direction, right? The one I mentioned was Credo. It's Q
Yeah,
R E
QRDO.
D
Yeah,
O.
yeah.
I can post it,
I know
right?
Credo. I remember Credo. Yeah.
And what they do, right? What's really amazing there is that if you're a financial institution, right, you're coming from TradFi, you have some fiduciary responsibilities. You have to set up custodial a certain way, right? You can't just say I own a wallet and, two out of three of my, board of directors or executive can just have ownership of it. There has to be a very clear line as to who owns what, how much exposure have your clients have to certain assets, for example, right? So for them, it's really, really, really hard to move forward unless there's a middleware, something that reduces all the complexity and friction to enter DeFi, right? And so on that list of projects doing that, beyond Credo, you can add Circle, for example, right? Jeremy Allaire was very, very good at talking to regulators and understanding their worries. There was, or maybe still is, Umami, who's working with Circle to get people to get on board onto that. So yeah, unfortunately, when it comes to like the actual implementation details, I know less about that. But I think the way it looks like is from the end user, right? If you're a financial institution, you probably have a CFO and a department that's focusing on crypto that says, hey, those are the rules by which our custodial has to, those are the rules that they have to respect. And they have to show proof somehow that they're respecting those rules, right? In terms of who can actually access those funds, when those funds are accessed, right? You need to have some kind of like proof of funds, for example, that is existing, or who's touching what on behalf of which clients, right? So there's a whole lot of audit and transparency and risk model that needs to be there. And when you look at DeFi 2.0, especially on Arbitrum, you start to see some of those things happening. For example, when it comes to risk modeling, you have things like CredMark that allows you to actually do some really deep data intelligence on top of the blockchain. You also have now like a volatility index, kind of like the VIX, right, for crypto, the C Volt, which was actually created by the VIX creator. So you have all those tools that TradFi is used to, and then they kind of have to provide to their clients that are existing, but they're not mature just yet. So if I had to guess, it's going to happen over the next couple of years, maybe not the next year or so, but like next 2 years, we'll start to see what it actually looks like for NFTs as well.
Sefi, I want to pass this topic on to you, given that there are some products in Cosmos that can facilitate stuff like that, and also things like some money market stuff, and even VIX on DeFi, if that was ever a thing. Things like Stay Network, I know they're trying to have an ecosystem where things can be built and sought through with things within the Cosmos. Sefi, you there, brother? Yeah, I think Safi's away from the phone or something. But Dal, if you wanna follow up on my statement, if you're familiar with the Say network.
No, I don't know. I was actually wanting to ask a question because I think Cosmos is one of the most exciting projects in the sense that you guys are bridging all those blockchains together.
Yeah,
And I was wondering if there's within that Cosmos ecosystem, is there a chain that's focusing just on that? Is that the project you mentioned?
yeah. Say is basically a combination of Solana, in the sense that, like, the original thesis for Solana was, like, to have all sorts of derivative exchanges built on top of it, right? Like the exchanges of exchanges. And Say has this like unique club system, right? But I'll go into that when I host them on a space. I don't want to, spend too much time going into project after project. But basically, what you're mentioning, Say Network provides the infrastructure built on top of the Cosmos to facilitate those kind of derivatives. And I think within the next 2 to 3 years, you'll see that throughout the entire Cosmos ecosystem. But if you like Osmosis, then you'll love Say, right? So it's like you take the best things from Solana and the best things from Osmosis, and you kind of meet them down in the middle, and that's essentially what Say is, right? But yeah, I agree with you, man. Within the next few years, I think we're going to see a whole new wave of innovation, and I think these digital assets are the second wave of growth in tech. Similar to what we saw from 1987 all the way to 2012. That last round of innovation. I think we're going to see that one more time, right? I think like the second half of this decade, you're going to see some pretty cool stuff. You know what I'm saying? Like you even have AI powered TVs now, man. I can tell my TV to turn on, and it'll just turn on. Tell my PlayStation to turn on, it'll turn on immediately, right? It's some pretty cool stuff, man. And you have these smart TVs that you can control from your telephone when you're not even in the room. And even like 3-4 years ago, you weren't even able to do that, right? So individuals say, oh, AI is not going anywhere, growth and innovation has peaked, and that's just not the case, right? And people wonder, so what's the incentive for augmented reality, right? Why don't I just put on my VR headset and have permanent eye damage, right? I think things like Web3 are gonna facilitate that experience of augmented reality, and I think that's gonna be the incentive for augmented reality. I think at first there's gonna be a massive amount of trouble, given the fact that when you have that rush of innovation, it typically falls in its face, and there's like a massive crash within the growth system, and then it has to pick itself up and be like, all right, this is what worked, this is what didn't work. It's time to push forward and onward and build on from there, right? So I think that first wave of AR isn't really going to kick off, kind of like AI, right? If you think of Google, the search engine, right, back in the mid 2000s, you had Ask G of Yahoo. That was actually AI, right? And it's sort of like a mini version of ChatGPT, but not as advanced as ChatGPT, because dude, ChatGPT can write code for you. It can write code for you. It can write a whole story for you, man. The framework of endless possibilities with ChatGPT are incredible, right? So,
Yeah, I agree with that.
so,
I
so,
think
so
the issue is that we get lazy,
yeah,
right? Like you mentioned,
yeah,
augmented
yeah.
reality. If you ask most people, like, what is a metaverse going to look like? Most people would say, "Oh, it's going to be like a Unreal Engine 5 type of metaverse that looks like a bit like Decentraland, but with more cinematographic look and feel, where your 3D avatar kind of looks like you. You can dress it up with, Chanel brand and stuff like that. But if we actually like reach out and take us outside the context of what we already know, to your point, instead of being this immersive 3D world, it could be just augmented reality. So you're projecting that those 3D elements into your living room, into your office, as opposed to having to immerse yourself into a 3D world. And actually, to give some orders to your argument, Apple has actually said, oh, in public, that they don't really care about the metaverse and crypto, but they actually been working on the dev kits, and they have this one kit called AR kit, and it's actually built exactly for that scenario. So that if you wanted to build a game using some kind of like game engine, you could leverage the technology to take a picture of your living room, your whatever room you are, and it can actually create a 3D model object, and including all the elements in that picture that you're taking. So you could basically recreate or create a game ecosystem based off an actual existing environment, right? Like maybe you're outside, or maybe you're like a gym and a class or something like that. You could actually use that as the base for a first-person shooter. So it's a completely different or a departure from what we expect the metaverse to be. But I think we get lazy, man. I think that's what happened to BTC Maxis, man. They were there for so long, so early, that by the time they heard about bigger blocks from BSV or smart contract with Ethereum, they're like, oh man, this is bullshit. It's not gonna happen.
Yeah, and then they were all proven wrong, man. A few years later, we're actually starting to have things that are tangible, which leads me to my next statement. Tomorrow, we're gonna have some of the team from GG Quest and a few members from Wolves DAO, and they focus on a lot of the GameFi and metaverse growth. So look forward to that. It's going to be at 2 p.m. Eastern time, and I see we're closing up on the hour. So just to remind everyone, my name is Wabi. I host these spaces every day here at Because Bitcoin Twitter Spaces. If you enjoy content like this, feel free to give us a follow here on Twitter and to turn on bell notifications. so you can be made aware of when these spaces go live. I really don't have a set time for them anymore. Sometimes they're at 7 p.m. Eastern time. Sometimes they're a little bit earlier, a little bit later, depending on the guests that we have or some scheduling conflicts. So if you enjoy this content, feel free to follow us. And just as a reminder, if you're new to us and you just came into the space, an upload of the space will be uploaded onto our YouTube channel within 5 to 10 minutes after the space is concluded. And you can find all of our other content there when it pertains to all of our other Twitter spaces, where most of our content drive is pushed forth. We have Market Check Monday through Friday, 11 a.m. Eastern Time. And then we have Market Talk at 4:15 p.m. Eastern Time. And equities, commodities, markets, things like that. And we also provide macroeconomic news data on our shows. And as far as digital assets are concerned, that's what I predominantly cover. And I like to host these community roundtables at least once or twice a week. But if I'm not, you can usually, catch us either interviewing people that are building stuff, right, building their own protocols, or people from the VC space, and also some core dev people, right? We're going to have Zaki next Friday from Cosmos. He's one of the core contributors. So look forward to that. And with that being said, if anyone wants to give some last thoughts, feel free to go ahead. Otherwise, we'll begin to wrap up. If anyone wants to come up and give some statements, ask some questions, feel free to click that request to speak button and I'll bring you right on up. Would love to speak with you and answer any questions that you might have. And if anyone knows anybody that's into writing and wants an outlet uh, to post their content and have somebody host their work, feel free to reach out to me. And we'll see what we can do to host your work on our website, which will be undergoing a severe revamp. And also, if you know any devs that want some exposure to a pretty unique audience, feel free to let me know. We're always on the lookout to onboarding quality guests on our shows, so feel free to communicate to me. So, with that being said, Avocado, is there anything that you wanna say or entertain before we close up the space?
No, not really. I mean, I think it'll be an interesting week. We have some macro stuff coming up, so for those people who are more active in trading, it'll be interesting to kind of confirm, if what we've seen so far is going to be sustained or not, and if for anyone else who's just more of a long-term holder, then hopefully it's just noise. So yeah.
Dow Chemist, how about yourself, brother?
Yeah, I'd say I'm not going, so maybe it sounds weird to say that, but the ETH Denver is happening right now, so there's some really cool events, speech are going to be happening there. There's a lot of conferences, so if you want to learn more, I'm not too much into technical analysis. I think, if you keep your eyes on the cool protocols, people that are really building the future, you get to meet them, talk to them. So yeah, pay attention to the events near you, or if you have to travel, man, get to meet some cool people there.
Gonzo, any last thoughts, brother?
No, not really. To be honest with you, man, I'm more of a listener today. I'm multitasking, trying to develop the website for the project and doing a whole bunch of things while I'm listening. So, but no, all I can say is that, what I gather from this conversation, that this, as we all know, this space is continuously evolving so quickly, the technology too. And I think that the key here is that we're all so early, right? And that's about it, man. I just wish I could join. I'm going to try to join more and more of these spaces. And like I said before, this is a learning experience for me, man. That's why I go onto all these spaces, to be honest. So I appreciate what you do, King Wabi, and I appreciate all the alpha.
Thanks, man. I appreciate the kind words and love and support, brother. Dios te bendiga, man. So, with that being said, I want to thank you guys for taking the time out of your Friday and joining us here on Because Bitcoin Twitter Spaces. My name is Wabi. We'll be back tomorrow at 2 p.m. Eastern Time with some of the people from GG Quest and Wolves DAO to discuss all things Metaverse, and GameFi. Take care, have a blessed Friday, and you can catch a replay of our spaces 5 to 10 minutes after the space has concluded. Take care, and God bless you.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm gonna get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, you say, I'm gonna trust the statisticians. You would have bought Dow Jones somewhere down here under 30,000, depending on how you wanna measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.